All right, let's dive right in. Today, we're taking a look inside the engine room of the Latin American tech giant Mercado Libre. They just had an absolutely blockbuster quarter, and we're going to break down the two key engines that are powering their incredible growth, starting with the headline numbers.
So first up, the big picture. These are the top-line numbers that kind of give you a sense of the sheer scale we're dealing with here, and they really set the stage for the whole story.
Get this, the company brought in a massive $6.8 billion in net revenue. I mean, a figure that huge just shows you how central they've become to the entire economy in Latin America. But it's not just the total amount, it's the speed. A 34% jump from this time last year is already wild, but for a company of this size, that kind of growth is it's explosive. And this wasn't just growth for growth's sake, it translated directly to the bottom line, with a record-breaking $825 million in income from operations. So the question is obvious, right? How on earth are they doing it? Well, to find the answer, you got to look at the first of two powerful engines driving this thing forward, their massive core e-commerce business. The strategy here is beautifully simple, but it is incredibly powerful. As their CFO put it, the whole goal is just to remove every little obstacle, every point of friction that might stop someone from choosing to shop online.
And they just made a huge move on that front in Brazil, which is their biggest market. They dramatically lowered the minimum order you need to get free shipping, taking it from 79 reais all the way down to just 19.
And the impact? Whoa, it was immediate. They made the change in June, and as you can see, the growth in items sold just took off, accelerating to 34% that month. They didn't just turn a dial, they completely flipped a switch on how people shop.
Okay, so let's move to the second engine, because this is where things get even more interesting. We're talking about their rapidly expanding financial technology division, or Fintech. An incredible 68 million people are now actively using their payment and finance app Mercado Pago every single month. And to put that in perspective, that user base has doubled in just the last 2.5 years. Doubled!
And here, they're running the exact same playbook they used in commerce. This quote says it all. Offering good interest rates on savings is the fintech equivalent of free shipping. It's another powerful, low-friction carrot to pull millions of users deep into their financial world.
And all that engagement, well, it fuels their next big venture, credit. They've now built a staggering $9.3 billion credit portfolio, with their credit card business becoming the single largest piece of the pie. But whenever you see growth that fast, you have to ask, is it healthy? Is it actually profitable? To understand that, we need to look at a key industry metric called NIML. It basically shows you the profit a company makes from lending after you account for bad loans and other costs. And the answer is a resounding yes. Mercado Libre is maintaining a very healthy 23% margin. In a market where fast growth and lending can often lead to big losses, this figure shows their expansion isn't just reckless, it's calculated, it's high quality, and it's deeply profitable.
So here's the really crucial point. These two engines, commerce and fintech, they don't just run side by side. They're deeply connected, powering each other in this virtuous cycle that people call a flywheel effect.
Think about it. The massive audience from the e-commerce side provides a steady stream of new users for their fintech services. And the enormous scale of both of those has created the perfect foundation for a third, rapidly growing business, advertising. It's a simple equation, really. As more people shop on the platform and more people pay with their app, more brands want to get in front of that audience. And that desire is driving advertising revenue up a whopping 38% year over year. So, what does this powerful, interconnected ecosystem mean for the future? Well, the company's recent moves give us two very clear signals. First, the financial world is taking serious notice of this stability and strength. The ratings agency S&P just gave the company a coveted investment-grade credit rating. That is a major vote of confidence in their long-term health. And second, even with the CEO transition on the horizon, the founder himself sent a really clear message. He emphasized continuity in mission, in strategy, and in culture. The message is simple. The foundation is strong, and the plan is not changing. This all leaves us with one final, fascinating question. By weaving together commerce, payments, savings, credit, and advertising into this one seamless experience, is Mercado Libre on its way to building the one essential, indispensable super app for daily life across Latin America?
The evidence from this quarter suggests they just might be.